You are wasting your money and you don't even know it. So many people decide to spend money on things that they don't even understand. And the reason why is because they think they're investments. They think they're ways to make money. But I'm here to tell you, investing in the wrong things, especially internationally, is a trap that many people fall into. And especially in developing or emerging markets or frontier markets, this is extremely detrimental. Hello and welcome back to the Traveling Reports. Today I wanted to go over why emerging markets are so fragile and why I think that a lot of people will not understand what the potential is in developing markets if they do not have an on-the-ground understanding. Of course, I'm presently here in Craiova, Romania, which is an emerging market which has a large track record of success. It is matching or outpacing many of the Asian tigers, and while many of the Asian tigers have stagnated, Romania continues to grow. And I'd like to truly go over why Romania went from sub-Saharan African levels of wealth in the 1980s to one of the wealthiest countries in Eastern Europe in the 2020s. And while I think that realistically the wealth story can be predicted, I think that it doesn't take prediction to make a ton of money in these markets. Of course, as I research more, if you appreciate it, feel free to subscribe. I am posting 2 videos a day and working tirelessly to bring you the best investment and consulting insights direct to your sub feed. Also, if you like the video, feel free to like it. That said, of course, if you are at all new to developing or emerging market investing, something that doesn't get brought up enough is the fact that currency risk and also the fact that if it's not tied to banking internationally, it is inherently extremely risky. So, I'll give you an example. If you had invested in Cambodia in the last few years, the net real return would be negative. Well, why would it be negative? Because the Cambodian real and the US dollar, the Cambodian real has actually gained a little bit against the US dollar. However, the real returns were negative, accounting for taxes, accounting for fees, and accounting for the fact that Cambodia and the real estate are typically priced in dollars. And so, had you just put your money in a bank deposit in Cambodia, you'd earn a lot more. And so it's with this that FX risk is one of the largest killers of wealth in emerging market real estate deals. And if you look historically, the real return is what you should be looking at. And of course, FX denomination is dictated by a lot. And if you'd like a deep dive into FX denomination, feel free to comment it down below. However, the inherent benefit to FX denominated returns is that it is a hedge, but that's also a downfall, as your real returns can be negative in a lot of cases. And we've seen this in markets like Egypt, where, of course, real estate has to be bought in pounds and sold in pounds. And the forex in Egypt is insanely poor, thus it is one of the cheapest markets for real estate in the world. Great for lifestyle property, horrible for investment optics. And then you have countries like Venezuela. You can buy a house for $30,000 in Venezuela right on the beach. The land title would be worth nothing, however you could. But the bolívares would make the house worthless overnight. So this is what you run into with denominating in local currencies. And so what you should be looking for when investing in real estate or investments abroad is how their currency is doing, what their currency is trending towards, and really how things are working. If you can understand those things, then you can understand how to make money abroad. And of course, it helps even more if you understand the culture of the country, which I have been posting cultural videos around the world. Of course, I'm presently, as I said, in Craiova, but soon I'll be going to Vidin in Bulgaria, and then I will be on to Sofia, Bulgaria. And so essentially, you have a large amount of potential for high returns. But you need to understand the culture, especially the business culture and the negotiation culture. You need to understand the Forex, and you need to understand how people operate. And I'm not talking about their culture. I'm saying their psychology, how they truly operate. And psychology, of course, is a very difficult thing to grasp your head around. As I grow, as I become more akin to international business, I realize how important it is. And of course, as time goes on, I am learning more. So if you're looking to join me in creating a total domination of all of these categories, and you're looking for the number one authority on deep dive analyses for your business, international planning, structure, feel free to subscribe down in the description down below. If you are looking for consulting, I would recommend reaching out on the Calendly link down below. If you liked the video, feel free to like it. If you really liked the video, feel free to share. And of course, I will be pushing out 2 videos a day, just as normal, perhaps even going up to 3 a day by this point. You'll see. And of course, this has been the Traveling Report, signing off.